Hello everyone, my name is Paridhi Agarwal and I welcome you all to Kiwi Tech's Startup 808 workshop. The workshops that we host are for startups and entrepreneurs to help them navigate the challenges of starting a business, making it sustainable and taking it to the next level. Our two mentor sessions today are on topics Research and Development Tax Credit, a Tax Savings by Lisa Capparelli, Director at Graphite Financials, and Developing an Entrepreneurial Mindset by Dr. Frumi Rachel Barr, an author, a founder at Barr Business School. But before we begin with our first session of the day, I would like to invite our BPVC and Corporate Partnerships, Jessica Chinfu, to give a quick overview of the Kiwi Tech. Over to you, Jessica.
Thank you, Paridhi, and welcome everyone to our entrepreneur workshop. So for those of you who are not familiar with Kiwi Tech, let me just give you a brief background. So about us, we're really a community of investors, innovators, founders, and corporations that are aiming at supporting entrepreneurs on their early stage journey. We ourselves have backed over 500 plus startups with our Equity Link program. From a technology perspective, have brought on 100 million in kind services. We've supported accessing capital of 100 and have above 3,000 investors in our network. How did we get here? And who are we? We are the second venture from our founding team. The first one was in the publishing space and they exited at about 144 million. We've really aimed at, again, as I've mentioned, bringing value add to early stage startups, really an Accenture model for early stage startups, started in 2013, bringing on our access to capital through demo days and curated deal flow, bringing on our workshop as well a couple years ago and growing in other regions of the world, such as our office in the MENA in Qatar, Doha was opened. And we're on track in reaching over 1,000 startups in our portfolio in the next couple years. Those are our capabilities. As I've mentioned, we're really in the sandbox of early stage startups, from our technology services, financial and accounting as well, through our sister company, which Lisa will be presenting on, events as services, our marketing, digital, and then support on reaching crowdfunding as well. This is the landscape of our events. We support as well opening up dialogue for founders and other investors to mingle with peers and just get further insight, whether you're mostly angel investing or are an institutional investors, or specifically into industries, emerging industries like blockchain. And that's about it. So I'll leave the floor back to you, Paridhi, for taking on our workshop.
Thank you, Jessica, for the overview. Now, I'd like to invite Lisa, Director at Graphite Financials, who would be mentoring us today on Research and Development Tax Credit, a tax savings. Over to you, Lisa. The screen is all yours.
Okay, so thank you for having me today. I am honored to be here, and I'm going to try to make a tax topic somewhat interesting. So here we go. Okay, so I work for Graphite Financial, as Jessica mentioned, and we started out in 2008, and we've supported over 50% of FF Venture Capital's portfolio of early stage tech companies since 2008, as I mentioned. And in 2016, we began operating as an independent entity. And the goal was to serve the broader startup community. My name, as you know, is Lisa, and I'm a director with Graphite. I've been with Graphite for a little over 5 years now. I started as a consultant and I joined full-time in early July. I'm a CPA and former partner of a small public accounting firm in New York. And my specializations are tax, audit, and the R&D credit, tax credit. Earlier in my career, I began with a Big Four public accounting firm, and over the years, I've worked for both publicly traded and private companies in various roles, leadership roles in accounting and financial reporting. As I said, the past 5 years, the focus has been on startups and the entrepreneurial industry, since this is really my true passion as a director of controller services and as well as being the tax director at Graphite. I'm a member of the New York State Society of CPAs and the AICPA. So what are our learning objectives today? Well, let's see. Are you missing out on a significant cash flow that can help your business grow or allow you to invest in technology? Are you paying too much in taxes? The research and development, from here on in, we'll refer to it as R&D, tax credit is a dollar-for-dollar credit which directly offsets your federal income tax liability and, in some cases, your payroll taxes. The credit was enacted 40 years ago, and it was really to reward and encourage companies to develop new or improved products, manufacturing processes, and software in the United States. So the goal was to really encourage those processes in the United States. So we're going to learn about the basics of the R&D credit, and what I will cover today is we're going to be able to identify R&D activities performed and the expenses that relate to those activities, referred to as qualified research expenses or QREs. Is your company eligible? We'll understand the four-part test to determine potential eligibility, and then we will discuss the specific exclusions of the R&D, of what you would not be allowed for this credit. Okay, so how we define R&D, when I say we, companies, taxpayers, is not necessarily the same way that the tax world or the IRS defines R&D. So how does the IRS define R&D? So they refer to it as what is qualified research. So qualified research is defined as the discovery of technological information by use of a process of experimentation for the purpose of developing a new or improved product. This definition is intended, again, to encourage product development activity. It excludes basic research. So any basic research excluded. And again, as the tax world defines it, we'll get into what a business component is. Okay, so qualified research activities relate to the development of a new or improved business component. The IRS refers to business components and defines a business component as products, processes, computer software, techniques, formulas, and inventions, whether held for sale or lease or used in the trade or business. So again, the business component is a product, process, computer software, technique, formula, or invention. Must be held for sale or lease or used in the trade or business. So what activities qualify? In general, activities qualify if they meet each element of a four-part test and aren't specifically excluded. So let's define what qualified research activities are and the four-part test. So basically the four-part test is this. It's permitted purpose, technological in nature, technical uncertainty, and process of experimentation. So you must pass those four tests. So what does permitted purpose means? It means that it must relate to a new or improved function, a performance, a reliability, or quality of, again, a business component, which we've discussed as a product, process, software, technique, invention, or formula. Again, that is intended to be used in your business or held for sale, lease, or license. Again, a business component. Research relating to style, taste, cosmetic, or seasonal design factors are specifically excluded from the credit and are designated as research for a non-qualified purpose. However, a limited amount, if you can use as qualified research, you can, if you pass a substantially all test. So we will get into further exclusions later, but initially it's style, taste, cosmetic, or seasonal design factors. The second test is technological in nature. So what does that mean? Means that the activities must rely on the principles of research in the physical or biological sciences, engineering, or computer science. So this means it specifically excludes the soft sciences, such as economics, psychology, or management sciences. The third test, is there a technical uncertainty? There must be an uncertainty as to the capability, method, or choice of appropriate design. So the company, you must encounter uncertainty regarding whether it can or how it should develop the component, or regarding the component's design. So there must be a certain level of uncertainty. And then the fourth and final test is the process of experimentation. And to me, this is probably the most important of the tests. Again, you must rely on the principles of physical, biological sciences, engineering, computer science, but it must do the following as part of the research activity. And here are the three criteria. You must identify the uncertainty. You must be able to identify the uncertainty regarding the development or the improvement of the business component. You must be able to identify one or more alternatives intended to eliminate that uncertainty. And then third, you have to conduct a process of evaluation of the alternatives. So you must be able to substantiate that in some way. And these four tests must be applied separately to each business component, and they must all be met. So now that you've passed the four tests, assuming you pass, are you not sure? Are you still not sure if you qualify? Well, I found this great decision-making tool. And I think this is, hopefully it's somewhat legible to you guys, but I'll go through it because I really do think it's a great tool. The first is, does the research meet section 174, which is a tax section, requirements? Meaning does the are the expenses incurred in connection with your business, are they R&D related? Are they experimental in nature? So let's assume the answer is yes. You have your qualified activities and you have R&D costs. And then it goes through a series of questions. Does the research discover information that is technological in nature? So that was number 2 of the 4-part test. Assuming yes, do substantially all of the elements of the activity constitute a process of experimentation? If you remember, that was the 4th test. Assuming yes, is the purpose of the research to create new or improved function, performance, reliability, or quality? So that was number 1. Does it have a permitted purpose? So assuming yes. This is a new question and very important. Did the research take place after commercial production? If the answer is yes, you automatically disqualify and you're not entitled to the credit. Assuming that the research took place prior, let's move on. Is the research an adaptation of an existing component? Meaning, was it adapted to a particular customer's need? The answer is yes, then there's no credit. Assuming no, does the research represent the duplication of a business component? Were there duplicative activities? So let's say no, then we can move on. Does the research represent a survey or a study? That would not be R&D. Was the research conducted outside the United States, Puerto Rico, or any US possession? So if the answer is yes, you do not qualify. As I said earlier, the credit was really, it was enacted, 40 years ago to really encourage this research in the United States. So is the research in the soft sciences, meaning in the area of social science or the humanities? Assuming no, we move on. Was the research funded by a third party? If yes, no credit. If no, we move on. So what does that mean, research funded by a third party? That means research funded by a government entity, a contract, or a grant. So that would be a third party. Did the assuming no, then the last and final question is, did the research involve the development of software primarily for internal use? Meaning, was it used in your business? Are your employees using it? So if the answer is no, you automatically are entitled to the credit. However, if the answer is yes, there are a series of additional questions that you have to ask yourself. Is the software used for qualified research involving a qualifying production process? I think that's pretty self-explanatory. Then you would definitely qualify. Is the software used to provide computer services? Again, if the answer is yes, you would qualify. And if those answers are no, then it's, does the software meet the high threshold of innovation test? And that is a series of additional questions that I did not include in this presentation, but I could happy to talk about it at a later time. Okay, so now that you passed the 4-part test and you went through the decision-making tool, and you feel confident that you qualify, what expenses are qualified research expenses? So what exactly are R&D related costs? The technical term is they comprise in-house expenses for your research, such as supplies used in research, computer use charges, and wages for substantially engaging in or directly supervising or supporting research activities. It also includes contract research expenses, meaning your third party, your independent contractors, which is actually limited to 65% of the amounts paid for qualified research done by these third parties. So for in-house, it would be your in-house qualified wages. It would be your W-2 wages, your box 1 paid to employees who, again, directly perform or support or provide first level supervision of the R&D. So again, even if you're supervising the R&D, you are entitled, that would be a qualified research expense. So that would really be for C Corps. However, if you're a partnership or a Schedule C filer, it would be your portion of self-employment earnings. So the claim is based on a percentage of time spent on qualifying activities. So I would assume that if you're directly performing the activity, you would 100% of your wages would be spent on qualifying activities. Supplies, these would be used in whatever supplies are used in your research. Independent contractors, which we've discussed, it's 65%. of the costs related to those contractors performing the activities. So that would mean outside engineers and testing facilities. And it's rental or lease costs of computers. So this would be payments made to cloud service providers. So related to hosting software under development. So like, for example, Amazon Web Services would be an example of a cloud service provider. Okay, so what is non-qualified then? What is specifically excluded? What would not be a qualified research activity for purposes of this credit? And we went through some of these in the decision-making tool, but it's research specifically conducted after the beginning of production of the release business. So it's research that is done basically after commercialization of the business component. It's research related to the adaptation of an existing business component to a particular customer's requirements or needs. It's research relating to the reproduction of an existing business component. It would be efficiency surveys, activities relating to management function or techniques, market research, testing, routine data collection. Research conducted outside the United States, Puerto Rico, or a US possession. Research in the soft sciences. Research funded by a third party, so meaning a grant, contract, or government entity. And research relating to style, taste, cosmetic, or seasonal design factors. So those would be specifically excluded, would not be a qualified research activity. And further, there it would be administration, training, any repairs and maintenance, trial production runs, troubleshooting, tooling up for production, pre-production planning for a finished component. So if you're unsure, it would be the ones on the previous slide, as well as the ones listed here. Those would be non-qualified research activities. So now that you pass the 4-part test, you have the qualified research activities. You're pretty sure that you are entitled to the R&D credit. What's next? Are you eligible? Well, in general, any company in any industry and of any size that invests in the qualified research activities can benefit. If you're paying regular federal income tax, if there's a similar state tax in one or more of the 35 US states that provide incentives for R&D, and in some circumstances, which we'll get to later, is the if you're paying federal payroll tax, or another also referred to as FICA. So industry generally doesn't matter, although historically most R&D credits have been claimed by companies in manufacturing, information, professional, scientific, and technical services. Millions of credits are claimed each year by companies in other industries, and of late, the tech sector. Definitely a rise in R&D credits in the tech sector. So even if you have $0 in sales, and 1 employee, you can still have significant R&D credits. If you have no R&D department, you still may benefit from the credit. In fact, most taxpayers who benefit from the R&D credit do not necessarily have departments that are explicitly named R&D department. Okay, so I thought I would expand upon the tech sector and what daily activities would potentially qualify for the R&D tax credit, because I thought this would be very interesting to go through. So some daily activities would include programming, software, source code. software algorithms aimed at improving efficiency, cloud migration solutions, application development, including mobile, developing software systems, online platforms, video game development, new technology, this is pretty obvious, new technology to streamline the main manufacturing process, a design of a database management system or document management system, enhanced customer interface software, software development for planned scaling challenges, improving functionality and capabilities of existing applications, establishing electronic interfaces and functional relationships between various software modules, conducting requirements, domain, software elements, or scope analysis for new functional software enhancement, compiling and testing source code, integration, functional performance, and regression testing. So those are some of the activities that would potentially qualify for the R&D credit. So common myth, my company is operating at a loss and I do not expect to pay federal income tax. Can I still benefit? What's the point of claiming this R&D if I don't have any taxable income? Well, you can still qualify if you, and it still makes sense to pursue it, if you are a qualified small business and you meet certain criteria. You can benefit from the payroll tax credit. So you wouldn't do the R&D federal income tax credit, but if you're a QSB, you could benefit from a payroll tax credit. So what is a qualified small business? Qualified small business is a partnership or corp, including S corps, that meet the following. You have less than 5 million in gross receipts in the tax year that you're claiming. So let's say 2022, and each subsequent year the credit is elected. You have gross receipts for 5 years or less. So for tax year 2022, for example, your company isn't eligible if it generated gross receipts prior to 2018. And you have qualified research expenses. So let's go through an example of a QSB, qualified small business. Let's assume AB Corp is a calendar year taxpayer with 10 million of gross receipts in years 1, 2, 3, and 4. It has 4 million in year 5. It had no gross receipts before year 1. So AB may make the election for the year 5 since it had less than 5 million in gross receipts and it did not have any gross receipts in the tax year that preceded year 1. It doesn't matter that its gross receipts exceeded 5 million during each of the 4 preceding years, because again, the rule is less than 5 in the tax year you're claiming and none before the 5 preceding years. So AB will not be able to make the election for year 6 because it had gross receipts in year 1, which again precedes the 5th tax year ending with the election year. So how does the IRS define gross receipts? Well, it's all amounts received for services and any income from investments and other incidental sources. So total sales, investment income from interest, dividends, rents, royalties, and annuities, regardless of whether those amounts are derived in your ordinary course of business. Those are all included as gross receipts to determine whether you are eligible and you meet the QSB requirements. So let's assume that you are a qualified small business. You've met the definition above. What does that mean? Well, you can utilize the credit against your payroll taxes, specifically the employer portion of FICA tax. So FICA tax is 6.2% of total wages. So the credit, the payroll credit, is limited to the following. The annual payroll credit cannot exceed $250,000, and the payroll credit for any quarter cannot exceed the total tax, FICA tax, imposed on the wages for that quarter. So in other words, if your credit is more than you're paying in FICA that particular quarter, you cannot take more than the credit. However, you will not more than the FICA tax, excuse me. However, you won't lose the credit. If it does exceed the total FICA tax for the quarter, you can carry forward the credit to offset your FICA for subsequent employment tax returns up to 5 years. Excuse me. So that's a total of $1,250,000 in credits. So here's another myth. Even if you qualify as a QSB, qualified small business, and you choose the payroll tax credit, but you also pay federal income tax, you can use the credit to offset both, meaning you can elect to use a part of the credit towards payroll tax and a part towards federal income tax. So there is some new legislation regarding the payroll tax credit, and the 2022 Inflation Reduction Act actually provides an increase in research against payroll tax for qualified small businesses. So in tax years beginning after 2022, so it would be for tax years, tax periods ending 12/31/23, the amount of this credit has increased from $250,000 annually to $500,000. So now a company, you'll be allowed to take a credit against the existing $250 against Social Security, but now you can also apply up to $250 to Medicare. So that's $500,000 annually for a total up to 5 years for a total of $2.5 million for the in total credit, total R&D. So that's a substantial increase and definitely incentive to look into this. So what does this mean for my company, and what are some potential benefits of the payroll tax offset? Well, again, we just discussed that it went from 1.25 to 2.5. And most new businesses and startup companies will likely see a benefit between 6 and 14% of their eligible R&D costs. So for example, a company with 500,000 of eligible expenses, qualified research expenses, let's say engineer wages for purposes of this, could receive a 50,000 credit. That's 50,000 in savings on your federal payroll taxes. That's significant. So how does this all get reported? What do we gather in order to determine your credit? We take your W-2 payroll data, your 1099 data, logs on what individuals worked on. We also can interview R&D personnel, and we require qualitative analysis from company management. All this information is analyzed. It gets reported on a timely filed, including extensions, federal tax return using Form 6765. So all this gets reported on your 6765, gets included in your federal tax return for that year. On the 6765, you choose whether you're taking the federal income tax R&D credit or the payroll tax credit offset if you're a QSB, or both. And the good thing is, if you don't owe federal income taxes this year, you can still carry it forward. You can still carry the credit forward to future years up to 20 years. So that's for federal income taxes, not to be confused with the payroll tax credit offset. So again, if you're a QSB, as described earlier, you take the credit on the following quarter's payroll tax return. So for example, you file your Form 6765 on your tax return, which gets filed by April 15th. Then the credit is taken on the immediate subsequent payroll tax filing. So in this case, it would be third quarter. And if you don't use your entire credit that third quarter, then you carry it forward until it's used up to 250,000. I'm sorry, up to 2,500,000 up to 5 years now after 2022, tax year ending 2023. So how do we monetize the tax credit? And here's the Form 6765, which is included on your tax return. So in this case, this example, it would be included on your Form 1120. So let's assume C Corp founded in 2018. We had 5 employees that are technical in nature, developing platform algorithms. So we had 500,000 in W-2 technical wages, 100,000 in lease costs of computers, 150,000 in applicable contract research expenses. Since this example has less than 5 million in gross receipts in 2022 and no gross receipts prior to 2018, this company qualifies as a QSB and chooses to take the payroll tax credit. So all these numbers get reported on Form 6765. There's a series of calculations here. There's a fixed base percentage, which for startups, if you're in business in years 1 through 5 is 3%, and thereafter it gets increases. You enter your annual gross receipts. There's some multiplication here and a limit, a threshold, which brings us down to a credit of 73,500. So that's your total credit. Now, since this company chose the payroll tax credit, how is this reported? The total credit is reported on the subsequent quarter's payroll tax return. So it's reported on Form 8974, and it's applied against your total FICA for that quarter. So that's a reduction of your FICA. In this case, we're just assuming 150,000 of a direct offset of that. So now it's only, about $80,000 would be your FICA for that quarter. Significant. So what are our takeaways? What did we learn today? And what are the benefits? Well, we definitely see increased cash flow, an increased return on investment, reduced federal and state tax liability, and in some cases, the payroll tax credit offset, and a reduced effective tax rate if you are pursuing the federal income tax credit. So many companies think that they have to conduct revolutionary or pioneering research. That's not true. Generally, you only have to attempt to discover technological information. So you're trying to develop or improve a business component's functionality, performance, reliability, or quality by systematically evaluating whether or how it could do so, or the component's appropriate design. So again, you have to be able to attempt to discover and go through the 4-part test. So there has to be a process of experimentation. What should you do to prepare for 2022 and subsequent tax years? To establish how much you spent on qualified research activities, I highly recommend that you rigorously document any activities you wish to claim towards research, because ultimately the burden of proof lies with you. So as a result, I do recommend that you keep good contemporaneous documents such as payroll records for employees that are involved in R&D, expenses, receipts for supplies and equipment related to R&D, contracts and invoices paid to any third-party partners involved, and 1099s, any blueprints, patents, designs, drawings, prototypes, and any project or and meeting notes related to research. Because again, the burden of proof lies with you. In the event of an IRS exam, an IRS auditor will ask for contemporaneous books and records. So that completes my presentation. And if okay, I'll open it up to some questions.
Thank you, Lisa. That was a wonderful session. We already have a question in the chat box. What about payments made to a US-based independent contractor that utilizes staff outside of the US?
Okay. Let's see. So can you repeat that? Can you repeat that question? What about third party?
What about the payments made to a
Yes.
US-based independent contractor that
Yes.
utilizes staff outside of the US?
That utilizes stuff outside of, well, the payments are made to a US based independent contractor. And the US independent contractor has a 1099 and he's performing the services, then that would qualify. But the supplies or anything that he's using outside, his services would qualify, but any of the supplies or anything that he's using outside of the United States would not. So it's a little tricky.
All right. What documentation is needed to claim the R&D credit?
Okay, so again, the burden of proof is on the taxpayer. So you need to keep good contemporaneous books and records. So W-2s, timing questionnaires, that the IRS may interview personnel. So you need to have good documentation as far as that. For supplies and payments to 1099 contractors, you need to have your 1099s, service contracts, invoices, receipts for supplies, just as long, again, it's not like it's not going to be audited. It's in the event of an IRS examination, you need to have this documentation in order.
All right. What activities do not qualify?
Okay, so Congress really intended to limit the credit to research conducted before the business component has met the basic functional economic requirements or is ready for sale or use. So it specifically excludes research after the beginning of the business component's commercial production. That's really, one of the things. The other is, as we said, the research conducted outside of the United States, research in the soft sciences, research funded by a grant, contract, or government entity. And I'm not sure if I said this earlier, but if those payments are contingent on success, then the research is considered not funded, because ultimately the financial burden is on the company. So that would not be considered funded research. So that would be included. And lastly, any studies relating to marketing or management functions, any data collection surveys, market research, efficiency surveys, things of that nature.
All right. Can companies formed more than 5 years ago benefit for the payroll tax offset?
Yes, they can, as long as they didn't have gross receipts in the 5 years preceding the tax year credit year. So for example, again, in 2022, as long as you didn't have any gross receipts prior to 2018, and you had less than 5 million in 2022, you would qualify. So it doesn't matter when you formed your company, you just can't have gross receipts. You have to meet those two criteria.
All right. Thank you so much, Lisa. Those were some amazing responses. We have recently introduced a referral program at Kiwi Tech. This program rewards anyone who contributes to fruitful introductions to our company. Over the years, we have built this robust ecosystem of startups with the help of your trust and subsequent referrals. We realize it is time we give due credit to this trust through our referral program incentives. So, if you know someone looking for tech development support to scale, join our referral program and follow the mentioned steps shown on your screen or visit our website to learn more. Contribute to our growth journey and earn incentives for your trust in us. I request you all to stay tuned as our next session will begin in a few minutes. Thank you.